2020 has been a huge year for crypto. Since early in the year, global uncertainty has sent shudders down the spine of the financial world. The turmoil, as well as the massive stimulus packages that emerged as a result, may have permanently changed the course of the world's economic history. One of the consequences of the economic events of this year has been an influx of investors into so-called alternative assets, as investors increasingly search for new places to find yield. For many investors, this search for yield has landed them squarely in cryptocurrency markets. Recently, finance magnates spoke to Scott Freeman, co-founder of JST Capital, about this influx of new money into crypto. JST Capital is a financial services firm specializing in the digital asset market, serving companies, foundations, and high net worth individuals. Scott, who has a background in the traditional financial world, also spoke about the effects of government stimulus efforts on the economy, about current trends in crypto markets, and about the work that JST Capital is engaged with. I'm Rachel McIntosh, and this is FMTV. Scott, first of all, I want to thank you for taking the time to join me today. I'm so excited to have you on the show.
Sure, thanks, Rachel.
Yeah, so I know who you are, but can you tell our audience members a little bit about who you are, what you do, and how you got into crypto in the first place?
Sure. So I'm one of the founding partners of JST Capital. We are a financial services company based in the US and Singapore. We first got into crypto back in 2014. And I was running a small hedge fund with a bunch of quantitative traders. And we were asked to make markets for one of the initial issuers / protocols in this space. So we had a very early introduction to dealing with crypto, dealing with blockchain, and also understanding some of the financial implications of the technology. Fast forward to 2018, I closed that hedge fund that we were running and decided to focus on crypto full time. Started this company with my partner, Todd Maracus, and Todd is based in Singapore. And like me, has lots of history in financial services. Essentially, the company is a bunch of traditional financial services people who focus on crypto finance ecosystem. We provide financial services to institutional investors, hedge funds, issuers, foundations, anyone in any company or institutional investor in the crypto space. We help them navigate the crypto ecosystem, generate returns on their assets, improve the returns in their balance sheet, and just navigate the world of crypto, which is, as you probably know, very opaque and organic.
Yeah, especially for institutional investors, I can imagine.
Yes.
So, yeah, so 2014, you're like a real OG.
Yeah, we got in really early. And at that point, it was just based on, we had a lot of relationships based on our days in banking. And they reached out to us and said, hey, we're trying to build our markets up, trying to build an ecosystem around this thing called a token. Can you help? And we had some background in the foreign exchange business, had been making markets for a long time and trading actively in the foreign exchange business. So for us, it was just an interesting project that then grew into a business essentially. It's interesting. We have definitely an interesting perspective, but by virtue of having been in it so long, you have a longer perspective on where we are today and the evolution of the markets. I mean, understanding, how to manage your keys and wallets and things like that, and how far the world has come. Like we were trading before there were even exchanges.
Right.
So just understanding just how far the world has come with the regulatory environment, with the technology infrastructure. It's pretty fascinating, honestly. And I don't think anyone could have predicted most of this back in 2014, honestly. We certainly did it.
Yeah, definitely. I mean, it is interesting to think that, when we think of Bitcoin coming from 2017, coming around 3,000 or maybe 1,000 to 10,000, where it is now, like, having a little bit more perspective, you really see that Bitcoin literally came from nothing and has gotten so huge.
Right. And now it's in a conversation. I think people generally accept it as an asset.
Yeah, absolutely.
Where that wasn't the case years ago.
Absolutely. So I want to ask you a little bit about the crypto options market. So first of all, how is JST Capital sort of involved in the crypto options market? And I want to also ask you, what are the biggest trends that you're seeing, from your position at JST Capital in the crypto options market?
Sure. So we are an active participant in the options market. We trade for our own book. But more importantly, we work with clients to help them use options to either generate additional returns or to manage their balance sheet better. We have a lot of people in our company have lots of experience using options to manage risk, and we work pretty actively with clients all around the globe to help them use options as a risk management tool. We think it's a very powerful product, but there are unique aspects of using options in the crypto space that people need to be aware of. I think trends-wise, the more recent trend that's been very interesting is just volatility. Crypto is a very volatile asset, much more so than any other real asset that people look to invest in. Nonetheless, volatilities have come off materially in the last month or so. We've seen a decay in just the volatility levels in crypto. We have lots of debates internally and with clients whether or not we think that trend will continue. We generally think vols will continue to come down, meaning volatility will come down from where they are, but we do expect there will be shocks to the system where volatilities do spike. But we do expect longer term that as crypto becomes more and more normalized as an asset, more and more people trade it, that will tend to make it a less volatile asset, if history is any guide.
Right. And I want to touch on something you said. You said that crypto options are, I think, sort of a useful tool for depending on it, if you know how to use them correctly. Can you talk about that a little bit more?
Well, there are a lot of people in this ecosystem who are sitting on a large amount of crypto. They're either a holder of Bitcoin for years and have a lot of their net wealth tied up in it, and they're looking for ways to increase the return on that asset, right? So they want to stay long the asset. So for people like that, there are just interesting option structures you can talk to them about where they generate some premium. Maybe they give up some upside or give up some downside, but depending on their risk tolerance and their profile, you can work with clients to help them generate additional return on their assets. So especially people who want to sell options and get some premium, it's not a bad way to generate some additional return. And we've had some interesting discussions with clients. We've worked with clients and structures like that generally approve pretty well. They've worked out pretty well for them.
Yeah, absolutely. So who are your sort of like ideal clients? Are they these people who have large amounts of crypto that they've been sitting on for a long time, or something else?
Yeah, I would say yes. We have a handful of clients who have just large holdings of crypto who just want to figure out ways to monetize those assets. We're just big believers that over time, like every other asset, people will look at them. You will assess your ability to earn money on that asset in making your investment decision. Just like when you buy a stock or when you buy a bond, you have some expectation of return on that asset. You'll do the same thing with crypto. So if you can own Bitcoin and know you can lock in a return of 5, 6, 7%, that will enhance or improve your ability to actually invest in Bitcoin. So we have a good business working with people like that. We've also worked with some of the issuers in this space that are sitting on a large balance sheet of assets and don't necessarily want to sell those assets. So we have some structures. We work with issuers or foundations to help them manage their balance sheet better. Like they don't want to sell their whole holdings of their assets. So you can come up with some interesting option structures for them. Again, it helps them to generate some income. They still have their exposure to their asset. And they can better control their balance sheet and their treasury function.
I see. Okay. And then sorry, I'm jumping back and forth a little bit here, but I want to ask you, when you said earlier that you've seen volatility kind of going down, as part of something that's happened, influencing the way that crypto options are being used. Do you have any thoughts on why that's happening and why, some of these other things that we're observing in the market today? What are the most important factors that you see influencing those trends?
Yeah, it's a good question. I think, interestingly enough, I would say since March, when COVID hit and the market sold off pretty aggressively, crypto at that point became pretty correlated with other assets. I think until then, it was really operating in its own bubble. Right. When the world de-risked and people started selling everything, you saw the same thing in crypto. So at some level, that theme still persists, where you see crypto is used as another risk asset. So when people are taking risk off in the market, you do see some of that activity bleeding into the crypto space, which we hadn't really seen prior to March of this year. What we also see, I think there's been some deleveraging happening. I think people really levered up over the summer. They saw crypto as a nice way to get additional yield. We can talk about this a little bit later with respect to the quantitative easing and the overall macroeconomic themes we're seeing. But we did see a lot of people turning to crypto just based on the fact that they thought it was a good opportunity to earn some money. That added a lot of leverage in the ecosystem, which also led to some volatility. We've seen, and I think we've seen a lot of that leverage come out of the market now, just based on our analysis. If you look at open interest and things like that and options positions, and it's as we talk to clients to understand what they're doing, we see that the leverage has come out of the market, and we also see there's been a degradation of overall volatility in the market. You know, we can argue which one leads the other. Is it lower volatility drives lower leverage drives lower volatility? But we have seen both of those come down over the last few weeks.
Yeah, definitely. And I want to also ask you just briefly, when you say that crypto markets began sort of correlating with stock markets and other equities markets back in March, what do you think? Why was that? Why did that sort of happen all at once right then? You know, when crypto previously had sort of existed within a vacuum?
You know, I think that people got scared, right? And I think as a result of that, when there's fear in the market, your first reaction is to go to cash, go to something that's 100% stable where you know you can't lose. Yeah. And I think if you remember, those times were pretty scary. Like the markets were selling off, at least the US stock markets were selling off 10%. Oil was, you know, if you watch the oil futures market, it went negative for a period of time.
I remember.
Right? There was a glut of oil. Yeah, it was nutty, right? There were just things happening. Like no one knew what was going on. It was just a mess. And I think people panic, right? When that happens, you're like, listen, let's get me out of everything, especially if you have a levered position on, right? If you're long Bitcoin and you're levered 4 or 5 to 1, you really just start cutting your position, right? Even if you don't get out of it totally, you reduce your leverage, you go to cash. So I think that just the overall fear in the market and uncertainty in the market bled through the crypto space, which is rational. I think that's a rational response to an irrational time, essentially.
Yeah, exactly. So, you know, kind of since that time, since March, and even before March, we've seen sort of a uptick in the regulatory environment around crypto, particularly in the United States. And there's, you know, several different theories as to why that is. But I want to ask you about one of the more important developments that's happened over the past 6 months, which is the OCC decision that came out that essentially allows banks to act as custodians for cryptocurrency assets. I just want to get your thoughts on this. Is this sort of as big of a deal as it seems, as people have been making it out to be?
Yeah, we think it's an important evolution in the landscape. On some level, I'm guessing it was fueled by the fact that banks were getting nervous, right? They were getting nervous that the deposits could start leaving the banks. The regulators don't want that to happen either, right? They like the fact that, you know, they know where the money is. They have a visibility into banks' balance sheet. They regulate banks. So there's some value in there's some value with regulators having visibility into the institutions that affect monetary policy. So we're definitely not there yet, but I think regulators are starting to see the writing on the wall and really reacting now finally to some of these trends that have existed for years and are honestly accelerating.
Right. I mean, I think it was just over the weekend that I don't know if you saw this, but there was the ECB came out with a document basically saying that a digital euro is imminent, or, you know, that it sort of must be explored in 2021. So maybe we can also see a digital USD sort of appearing on the horizon sometime in the future. What do you think about that?
Well, I think the interesting thing is we're very active in the stable coin space is how we refer to it. So it's issuing coins that represent interest in a currency, a fiat currency,
Mhm.
that market already exists. There are banks in the US today that do a substantial amount of business where they're transferring assets using their own issued stablecoin.
Mhm.
So that business already exists. In Euro, it's a little bit slower, but we have clients that we work with that issued Euro-backed stablecoins. So
Right.
on some level, this horse has left the barn already. Banks are already doing this business. I'm expecting that's with the approval of the regulators that regulate them. So, at a more fundamental level, I think you're starting to maybe see some central banks that are saying, "Hey, we're thinking of adopting this as well as another tool in our tool chest for managing monetary policy."
Mhm.
But in terms of institutions actually issuing coins that represent an interest in a fiat, that already exists, and that we're a big believer that is going to continue to explode. It's just so much easier. When we want to move euro, it literally takes us 3 seconds. We can move euro to any counterparty around the globe using a euro-backed stablecoin, and that just doesn't exist in the real world.
Right, exactly. So I want to also ask you about quantitative easing. So you have a background working for the Federal Reserve, and quantitative easing has been a huge topic in the cryptocurrency space and outside of the cryptocurrency space for this whole year. We might have another stimulus package coming through the United States, with sometime in the next couple of weeks, months here. But regardless of whether we have more stimulus coming at this point, there's already been quite a lot of stimulus being poured into the economy. So
Right.
what are your thoughts on how quantitative easing is going to affect the economy over the short term and the long term?
Well, I would say more recently, we've just seen an increase of investors looking for yield. Like, you can't find yield anywhere these days, right? There's so much cash. The world is awash in cash right now, and people just need places to put it. And to buy a 10-year note and earn 70 basis point on it, or buy stock in Apple that's gone up a fourfold this year, isn't a great place to put it these days. So interestingly, we have seen an increase in the number of inquiries we've had from clients saying, "Hey, listen, investing in the crypto ecosystem, what kind of returns can I get?" And the returns that we can generate are pretty good relative to what's happening in the market. And in the past, where people haven't wanted to deal with some of the anomalies of the crypto ecosystem, the way custody works, the way trading works, the way exchanges work, the lack of consistent regulation, I think people are more comfortable with those risks now and are comfortable investing assets in this ecosystem, for one reason, because returns elsewhere are so anemic right now.
Right. So crypto has kind of become maybe the one place or one of the very few places where you can actually get yield.
Exactly. Yeah. And it's the crypto ecosystem. It's like, I have, dollars, how much can I earn investing that in trading strategies in crypto? Or maybe it's, going long Bitcoin and selling options. I mean, there are all sorts of strategies you can deploy within the crypto ecosystem and generate some nice return for a good risk. I mean, your risk adjusted return is very favorable compared to everything else that exists in the world today. It's really hard to get yield these days. And, you talk to anyone in traditional finance and, they're talking basis points, right? And we're talking, percents.
Right, exactly. So do you think that this is going to continue? So, if we see more quantitative easing coming, or just even if we don't see more quantitative easing, but we just kind of continue, to feel the effects of what has already happened. Do you see this trend towards crypto continuing?
We do, and we think there's a lot of tailwinds for us, which are supportive of that. Number one is the regulatory environment is getting much more favorable. There's a lot more transparency. There are a lot more regulators that are giving clear guidance on where the lines are, and what you can and can't do. That's number one. Number two, clients are valuing customers and institutions that have a clear regulatory framework. So if you are regulated, we think that is a competitive advantage, and clients think it's a competitive advantage. So we think that's all beneficial to the growth in this ecosystem. We also think that the growth of the DeFi space, which we haven't spoken about, has been huge in the last 3 to 6 months.
Right, right.
And we think that's going to be a huge evolution. People have been talking about DeFi for years. And I think now you're starting to see some interesting solutions that are actually taking it, like the real business behind some of these platforms and tokens that I think are very, very interesting. And that raises a whole host of other regulatory questions, legal questions, all sorts of questions. But we think that's a big trend that will continue. And that, we think DeFi is today where crypto was in 2014, put it that way. Like there's just a lot going on. There's a lot of nonsense, honestly. There's a lot of stuff that we don't go near. But there are some interesting opportunities, and there's a lot of money being put into that ecosystem. And we're very, very active in it.
Okay, yeah. I mean, like you said, there's so many different questions, so many, from the regulatory standpoint, blah, blah, blah. There's so many different ways that this is going to grow. But how are you as JST Capital sort of approaching and interacting with the DeFi space?
We do it in a few ways. We invest in it. We'll put capital to work either at a trading level where we will put money into a particular trade or protocol. B, we do invest in some companies who are raising capital to support it. C, I don't know if it's C or three, but C or three, we work with our clients. Our clients come to us and say, we have a token and we want to get into DeFi. Can you help? How do we change our business or evolve our business to take advantage of the opportunities that exist? And then finally, we have clients that come to us that want to put money to work, and they'll come to us and say, can you invest for us in the ecosystem? And we have hedge funds, we have managed accounts, we have different things we can offer them to help them navigate this ecosystem, because it is crazy. It's just there's just so many variables you need to be aware of, and risks. It's just unique risks that you need to be very, very careful of, from key management to liquidity, to security, to just people. But there's just really interesting opportunities in this space. And there are really some very smart people chasing some really interesting solutions to some good problems.
Yeah, absolutely. And I am very curious how this is going to develop from a regulatory standpoint, given the fact that the point of these platforms is that they exist autonomously, essentially. So I think it's going to be very interesting to see how regulators tackle that.
It's very interesting. So we were speaking to a client the other day who was looking at getting into it. And the client has been spending a lot of money with their lawyers trying to get some clarity from their lawyers. And finally, the client just came to us and said, I'm tired of paying my lawyers to tell me they don't know. It's like, I pay my lawyers so much money, and all they tell me is that they don't know. It's just at some point you just stop paying them and
just do it.
You do everything in your power to make sure you're not crossing any lines. But the client is just like, listen, I literally have spent tens of thousands of dollars, much more than that. And the lawyer just comes back and tells me they don't know. So, what do you do in that situation?
Right, exactly. That's so tricky. And hopefully we don't see, sort of another round of regulation by enforcement from the SEC and other relevant bodies as we move forward.
Yeah, I mean, you'll see them picking up some low-hanging fruit, which makes sense. Or people, like, there'll be frauds out there. There will be Ponzi schemes. Yeah. There will be things like that they shouldn't and hopefully will go after. Right. But when you involve in, like, just invest protocol or doing yield farming or any of the things that are happening, I think it's very, very difficult for the regulators to get their head around those things. And also, you got to be very careful where you set the boundaries of that. Because it's a global market, it is decentralized, and there are lots of really difficult things that are happening there. So it'll be interesting to see how that plays out.
Absolutely. Scott, I want to thank you so much for your time. It's been such a pleasure to talk to you. But before we go, can you share a little bit about where our listeners can find out more about JST Capital, or do you have any announcements to share?
Sure. I would just say go to. We just, it's an exciting time for crypto, blockchain, DeFi. I think, we spend a lot of time trying to figure out where it's all going to go. We're open to anyone's ideas, suggestions. We're not good at reading tea leaves. It's very, very difficult. This is an organic market. And it continues to perplex us as it grows. And we're just trying to stay not too far behind where it's evolving.
Okay. Well, Scott, I wish you all the best of luck.
Great. Thanks, Rachel. Appreciate your time.
Absolutely.
For more information about JST Capital, visit jstcap.com. For more news, events, and podcasts like this one, you can visit financemagnates.com. Thanks for listening.